Welcome to the Salty Investors episode number 25. Sometime a milestone there, Tim.
Quarter century.
That's almost, yeah, it's like 25 weeks. So it's almost 6 months. Unbelievable stuff. Anyway, let's get straight into the salt for this week, Tim. And I will kick it off with Pocahontas, Senator Elizabeth Warren. She has come out and said in the wake of the latest Fed hike, Warren said Powell is trying to drive the economy into a recession with interest rates hikes and raise the unemployment rate more than 1 percentage point in a 12-month period, because Warren's actually done somebody's told her some historical data that says that if the unemployment goes up 1% or more in a 12-month period, there's always usually a recession follows. And it's like Warren is under this magical belief system that you can, bring down inflation, raising interest rates without any effect on the economy. She's a believer in a per bad ever happens, and she's just delusional. Of course, the unemployment rate's going to have to go up if you're going to slow the economy to slow inflation. There's no other way to do it. There are no trophy rooms where everyone gets a medal. There are only trade-offs, and this is how it has to work. Sorry, Warren, you're delusional. What do you reckon?
Yeah. She called Powell dangerous as well, and I think she's more dangerous.
Oh, absolutely.
Like amount of things that she's done over the last couple of years, the lockdowns and I don't think what she's done has helped with inflation. There's the fiscal side as well. Build back better, whatever it is, spend more, whatever. She's definitely part of the problem here, and sort of blaming it all on Powell. Like, Powell's made some serious mistakes here, don't get me wrong. Like, he's really dropped the ball a couple of times here, but imagine how bad things would be if Senator Warren was in charge. Like, imagine how bad inflation would be. So, yeah.
Well, I mean, and then, to top it all off, she said about, raising FDIC insurance from the current 250,000 to, she said, what's the right cap? She actually said, is it 2 million, 5 million, 10 million? Small business need to be able to count on getting their money to make payroll, to pay the utility bills. No, like what I dislike here is the conflation with, some guy running a barbershop or something, so small business, and Silicon Valley tech bros with their startups, most of which fail anyway, and half of which half of the ones that have been bailed out have probably, all that's going to happen is that they're going to get to make payroll for another year before their business actually fails and they go in the trash bin, right? I mean, that's really, so I'm glad that Senator Warren, who's, always looks out for the little guy, is now sticking up for Silicon Valley tech bros. So isn't that a wonderful thing?
She's got a big heart, such a big heart, goes all across the whole crowd. So yeah, I don't know, just, wants to win votes here, I see, but like, she's worse than this.
I mean, the cynical view is she's just grandstanding, isn't she? Look at me, I'm a populist. I mean, she did do this quite successfully during the financial crisis. And she successfully lobbied to get credit card companies to cut down their, their contracts from 35 pages to a 4-page document or something, which to me, it sounds good, but at the end of the day, I mean, if you don't know that you pay 20% interest when your credit card, you're an idiot and you don't know how to manage your money. I mean, that's all it comes down to. But anyway, never underestimate the grandstanding of Pocahontas.
Yep.
What apart from jumping on the Warren bandwagon, have you got any additional salt to add?
No, not really. Just the typical stuff, Old Ackman's at it again, he's another one chucking on the pile here. Like, you think that guy's got a capitalist bone in his body, and he just keeps tweeting away, pretty sad.
It's good to see he's talking about finance again instead of the Ukraine war or something. Yeah.
Yeah, I know, but maybe you should go back to talking about Ukraine war. It's a bit of a little, not going to hurt us as much, but crikey, he's just really gone off the deep end here, and I just wonder how exposed is Bill here to all this, I don't know. I think he's old, getting a bit old now. I think he needs to hang it up a little bit here and find another profession or something. I don't know. Just doesn't have the fight in him anymore, I don't think, to go out and create value. Just wants to, yeah, I don't know.
It's funny, if you go back and you look at clips of Ackman's from sort of 15 years ago, he used to come on. He looked and sounded almost like a sociopath. He was just so sort of. You ever seen him? You go back and look at 15 years ago, the way he used to talk about finance. He never cared about anything else. I don't know what he did. He went and did a meditation course or something, and now he's become all socially aware, or he's went to one too many ESG seminars or diversity lectures or something, and he just seems to have lost the plot.
Yeah,
but I think Bill will be all right. He can go home and count.
He'll struggle through. Yeah, he'll struggle through somehow.
He'll soldier on.
Yeah.
Don't worry about Bill. So I guess big news this week was that the Fed raised quarter point. Of course, some people were suggesting they might go 50. That was before the bank blow up, the crisis, which is it's probably a bit bigger than I thought it was minor, and it probably is a bit bigger than I thought. But I thought what was interesting is that the stock market seems to be acting like we've been saying this for months, that the stock market has been overestimating the likelihood that interest rates would come down.
Yep.
Right? We've been saying that for probably since we started doing this, and we've been right about that. But now they and eventually bond yields edged up, and you had 4 or 5% bond yields, certain durations, and now it looks like they've got another hope on the horizon. Yeah, with the bank blow. Well, yes, and I mean they did soften their language. Like I think the Fed said in the previous statement that they anticipate more rate rises, and this one they said there may be. We may need to, or something like that. So they softened the language. People are saying there's one more. I just put the dot plots up here from December and March, and you can see they basically haven't changed. Obviously the 22 has fallen off because it's now 2023. But if you look at the 2023 dot plots, the only thing that's changed is there's only one person now below 5% by the end of the year, whereas there was two, and there's someone else's actually up to about 5.9, and there wasn't anybody that high before. So the Fed, well, the FOMC participants, they haven't priced in any lower inflation at all into their forecast. Now, notoriously, they're not great at forecasting, so you have to put that caveat out there. But I mean, these are the people who make the decision ultimately about interest rates, and they aren't budging yet, despite this mini, maybe slightly bigger banking crisis. So I'm having this. I mean, I realize this narrative that I'm setting up here is largely of my own construction. But what do you think about this idea that the market is just looking for a reason to run, and the banking crisis gives that to them because they're anticipating rate cuts and lower rates earlier than what they would have done 2 or 3 weeks ago?
Oh, the market's definitely thinking that, but you see they're covering pretty well here with all the banks. I know the news comes out all the time. Oh, they're not really covering it. Not all deposits are going to be covered. That comes out every couple of hours, it changes. Yep. But I think overall they've got this under control. I don't think this is something that's going to break the system. What everyone's looking for, I don't know, maybe famous last words, but it just doesn't seem that systemic to me. Like the big guys aren't involved. This is just a small around the edge. I know we've said this before, GFC, things can get out of control, but I just don't see how this rolling on for months and months, and then, something really big breaks here. I think we're going to see other things like in Europe. Like, how can you say, like, all the French banks and the Italian banks, how are they all holding up with the American banks are going on, like they're lifting as well. And you see in the UK overnight, and they're gone 50. So, like, they should go before the US banks, you would think. We should see other signs. But what are you thinking?
I mean, I just wonder, all this discussion about should remember that these bailouts are different in the sense that it's not taxpayers' money going into TARP. It's FDIC insurance, and I assume that the losses to date have been covered by that FDIC insurance, which the banks pay, right?
Yep.
The banks pay that. It's a levy on the bank. So in that sense, it's not a bailout from the taxpayer's point of view.
Well, not yet.
But ultimately, yeah, exactly. And so you've got Warren there saying, do we do it up to 2 million, 5 million, 10 million? It's like it's at some point, FDIC insurance is not going to cover these losses, and it will be on the tab of taxpayers. And, I just think it just seems that all that momentum is going in the direction of more insurance, which again is a cost on banks, which does have a knock-on effect to Main Street in the sense that, well, banks can't do as much.
Yep.
If they've got this extra funding cost of FDIC insurance. So I mean, at some way, it comes back to the old: there's no free lunch. Somebody's got to pay for it somewhere. Better the banks than the taxpayer.
Yep.
But don't think that there's no knock-on effect to that.
Yeah.
And maybe the better way to do it is to have no insurance. And say, I know that it's a very popular line now to say it's not the customer's responsibility to figure out if their bank's solvent or not. I'm like, but do they have any? I mean, people aren't that sophisticated to figure that out. That's fair enough. But do they have any responsibility? I don't know. Well, maybe this idea, because we take for granted that I put my money in the bank, it's safe. Maybe you shouldn't. I mean, people up until sort of 100 years ago, nobody did. Nobody was that silly. We've become too comfortable with the idea.
Yeah, and as you can see, the stress tests don't work. And I'm sure there's, a few insurance companies that would love to offer a product to insure unlimited bank accounts. If you wanted to pay for that, you want your whole deposit insured, go nuts and pay for it. But everyone just wants a free lunch. They want the free insurance, like you said. But
they want to get 4 or 5% on their savings account. It's like, well, if you want to be insured for any amount of money, you can't expect the bank to pay for that and get your 4 or 5% on your savings account either.
And instant withdrawals.
And
like I can pull out, $100 million overnight. Like you just, how's the bank making this money? Obviously they're putting money.
And if you do want that, well, then you have to go back to a system where every single loan is matched by. So you can't lend out more than you've got on deposit. There goes fractional reserve banking. There goes the cost of everything goes way up. It's like, what kind of system do you want?
Yep.
Again, it's this idea that there's some, I don't know, utopia out there. It's all about trade-offs.
Yeah.
There's no perfect system.
Yep.
But no one wants to take any losses. Everyone wants to be made whole. No one wants the responsibility. And yes, somebody, and Elizabeth Warren just wants to lump it all on Powell.
Yeah.
And I feel sort of strange defending Powell because I don't think he's actually acquitted himself wonderfully.
No.
But here we are defending Mr. Powell for some reason.
Dig ourselves into these situations, but you just rather, Powell. I think he's doing a good job at the moment. I think he's sticking to his guns. He said this is what he was going to do, and he's stuck with it.
Yeah.
And they're all backing him up here, as you can see. FOMC, they're all so.
Yeah, that's why I really am annoyed when I see a lot of commentary about this is the Fed's fault. They raised interest rates because they telegraphed it. They did tell you they were doing this. They didn't just do it yesterday. And you're in a bank like SVB and you're not hedging your interest rate risk. Like every bank, borrows short and lends long, but most banks hedge out their interest rate risk. They didn't have any hedge out, and they're 90. I think I read today 91% of their loans are to one industry. There's no diversification of risk there. I mean, this is pretty basic stuff. Anyway, so the dot plot hasn't changed, but it might. I just thought we'd have a look at the 10-year. The 10-year is obviously it's gone from close to,
Yes.
well, it did get over 4 there late last year, but it was back up to 4 recently, because that was the sort of, oh, look, they're finally succumbing to the idea that rates aren't going down anytime soon. And of course, the banks, this sort of bank failure has pushed it back down again. Whether or not, the bond market has had to begrudgingly follow the Fed.
Yep.
And it's just going to be interesting to see who follows who this time round.
It
I'm
still
not
looks
sure.
good. 3.5
Yeah.
here. Like, that's still, we are going to be cutting at some stage here. And you think, like, they will be cutting to under 3. So you think, oh, well, there's an arbitrage here to a degree. Like, if you can hold out a couple of years, I still think the 10-year is looking pretty good. But the 2-year's looking good too as well. It's all inverted. So,
Yep.
yeah. So, I don't know what's going to happen. But, yeah, it's interesting. I think the VIX on the bond thing is, gone off the charts. That's supposed to be pretty stable, and they're all over the shop. You can see here that's a huge move. So
it's a massive move in such a short period of time. Yeah.
So, look back
60 basis points.
Yeah, beginning of the year, that's massive. You shouldn't see that in bonds. That shows there's serious, concern in the markets. But we're not seeing it on the equity side. My VIX is sick and 20. Like, come on, got the 25.
Yep.
I don't know.
Yeah, so that's why I think that the stock market's just going yes, cut. We're going to get a cut soon. In Australia, they were basically forecasting about 4% terminal rate. Now they think we're already there. So you can see they think we're cutting as early. Like, if we're at 3.6 now, you've got a 340 penciled in September. So September, October. So they, that's implying, a cut within the next 6 months, 5-6 months. And, usually, like, prior to, if you look at the table at the top, now prior to all this bank stuff, I mean, they were pricing, that was like a 70 or 80% likelihood that we would increase to 3.85. Now we've got basically the consensus is we're not going to change at all, and there's an 18% chance of a cut. So that's turned around pretty quickly. My view now, I think we said last time we talked about RBA, which is probably 2 weeks ago, I thought, at least one more. I think you did too, and possibly 2. So I wouldn't be surprised at this point if they do just go on hold again, because they can, and they just watch developments in the United States. And I wouldn't be surprised if they do that. But
our banks are fine, but like, what's the all right? You shouldn't be looking at that. But yeah, sure. And I think that'll put worry into the market. Like, we're just holding. Wow, something seriously is broken. That we're just waiting it out. I don't know. It doesn't seem high enough yet, but.
No, I agree. I just think that, as we've said before, or as I've said before, I think the RBA is in a position of luxury in the sense that they can afford to piggyback off the back of what the Fed does, right?
Yeah.
They can the Fed does the work for them, in other words, and they don't. Because, I mean, the Fed, the US doesn't care what we do, but we have to care what they do.
Yeah.
So.
But that means the Australian dollar is going to get weaker probably on this, I think.
It did. It got sold off. It got sold off after the rate rise, pretty hard. So yeah, I mean, if I don't know if this is just my bias, but I have a sneaky feeling they might go one more anyway. But we'll see.
No, I don't think the market will see that negatively, like they did in the US. Everyone was panicking about, they're going to do 25, and the market's going to see it badly. The market just took it on the chin and goes, that was the right thing to do. Inflation's still high. We need to do the hard work early. The market is more mature than what, some of these pundits give it, I think.
Or like Elizabeth Warren, It's like, So, Elizabeth Warren thinks that, like, it's hailing, it's 100 mile per hour winds, and you're trying to land a plane, and, I don't know, there's cats and dogs falling from the sky, and, it's it's biblical kind of stuff, and you should be able to just come in and go, yeah, no problem.
Yep.
Land the plane perfectly.
Yeah, I know. It's not that bad. Yeah.
So we're already into that. We're already into the stock of the week. So what do we got? Jack Henry. What's Jack Henry up to?
So, bit of a banking issue the last couple of weeks.
Just a little one.
So, I'd like to invest in banks. I don't think I'm smart enough. And the leverage just, as we can see, like everyone, even some of the smartest people are buying in and, just getting obliterated. So I'm sort of staying out of that until it becomes just a fire sale, which I doubt would ever happen. So I don't think I can ever get to those levels. But Jack Henry, they basically do the core software for banks, about 1,000 banks in the US, small to medium banks. And so they, when you set up a new account or you transfer money between accounts, they're looking after all that back end.
Right.
There's another couple of companies who do this. That's Fiserv, which is basically one of the Seth Carman's type businesses, and but he's selling out of that now. And Fidelity Information Services, and they're about 10 times the size of this type of company, so they're quite large. But this company's got like just great metrics, and they've been doing it for a very, very long time. As you can see here, like the buybacks, the price isn't too bad, historically there, you're not buying at a crazy multiple. It might come down a little bit here. And return on invested capital in the 20s, that's quite healthy for, and it's consistent, like it's just staying there. So that shows that they're, not over investing, they're really good with their capital allocation, and you'll like them. They actually build stuff in-house. So they do a little bit of, they do about acquire a bolt-on, 1 or 2 a year, small little bolt-ons, and you've got to expect that, every CEO thinks they're a great capital allocator, but yeah, they basically build in-house, and they've got 1,000 banks here, which they can continually add more products to.
And are they customizing, or do they just have sort of one platform they roll out to everybody? Or
a little bit of customizing, but they control 20% of the banks and 10% of the credit unions, so that's nothing to sneeze at. It's just, and now they're expanding a little bit, like they're moving to the cloud. And they're unbundling it. So that means that they can, if you just want to trial out their customer sign up process, you can just run that part in your bank. That's the other good thing about it. It's super sticky. You imagine you're in a bank, you're going, oh, well, let's switch, core software providers. You'd have to, that would be just a nightmare. It's a 24/7 business now. Like you can't just be, turn it off on Friday. You're like,
it's worse than the average person changing their bank. Even bigger pain in the ass than that. It's, how do you do that? You can't say we'll do it overnight when everybody's asleep.
So imagine all the scheduled payments. Oh, you just lose your mind over it. And the account numbers and just the currency exchange stuff. Oh, it just do your head in. Like there's no way that you'd sit around and do a war game of this and go, oh yeah, let's just save 10% and switch. You're not going to do that. There's no way in the world. And you can see the dividend payout ratio is, very healthy. So they've got, they're doing buybacks as well, keeping it pretty steady there at the top. Interest coverage, which you like.
Haven't added that many employees either.
Just trickling along there. So yeah, nice little compact type business that isn't getting out of its scope. That's what, not trying to grab on too much. And if one of these bigger players falls over, well, you're going to see them grab even more, and they've got all the software to do it. So,
I suppose if
go ahead.
Go ahead. No, you're going to say something.
I've got a few problems, so you go first.
I was just going to say, I mean, Before the financial crisis in the United States, there was over 8,000 banks. There's now just under 5,000. So if there is some other crisis and there's more consolidation, they could lose some customers.
Yep.
Yeah.
So there is that problem as well, but banks are turning into more of a fintech type thing, more loans, more quick service loans, things like that, where they really need software and they need no labor.
Yeah.
So you really
they want all the application processes just become an online thing rather than going in and sitting down with somebody, meeting a loan officer. I mean, why do you even need a loan officer anymore? Yeah. You shouldn't need one, should you?
Yeah, they just look at your FICO score and go, we'll lend you this much. And how much, what's your credit, and
you do not need a person for that.
No. I'm pretty sure software can handle, 80, 90 or all of it for small. Like if you're a small bank, you go, oh yeah, under $5,000, your FICO score is good. You've got a good history with us. Crikey, you're not going to worry about like coming to the bank and sign a few forms and blah, blah, blah. You're just going to give them a line of credit. So you can see where software is just going to keep, but you're right. There's going to be more consolidation in the banks for sure here. Just the regulations that are coming down the pipeline are going to, but that's going to suit these guys as well. Like you need software to make sure you're doing all this correctly and audit trails. You don't want paperwork, so.
Yeah. So these guys have to be up on all the compliance bullshit, don't they? Make sure that their processes are in line with, because there's more regulation coming. That means more compliance. It always does.
But they're growing, low single digits, like 7 or 8%, revenue and EPS, so like they're doing the right things here. But a friend we've got, Aris Capital, the Australian guys, the quality investing guys. They sold out last quarter, and I'm just
really.
And I'm like, he didn't give any reason at all. It's all very hush hush.
Didn't he?
No,
because he puts out a monthly report, and he usually says this was our best performer, this was our worst performer.
So I don't know if he wants to rebuy in at another time, so he's not rocking the boat too much, or what's going on here. But I'm like, I can't find, like the gross margin's a little bit low, and that's not, it's deteriorating a little bit here, and return on invested capital isn't, setting the world alight here, but crikey, that's a pretty stable business, You look at, out of 100 companies, this would be in the top 10% of stable, good returns. So I'm just not sure. And it's done, for example, how well it's done. It's done 39,000% since inception, which is 1986, compared to 1,900% for the S&P.
Wow.
So they are, these guys know what they're doing, and they know how to bring value to shareholders. So I'm just not sure what's going on here. I've put over the cash flow statement and the balance sheet on the next one. Got a little bit of debt, but that's nothing compared to the cash flow.
It's ridiculous. It's covered 3 times over by operating cash flow.
I just can't see
cash flow. Yeah,
I'm hoping to get Stephen on. Have a bit of a word to him and see what if you're listening. I'd love to know, what are you seeing here? I just can't see it. What's going on here? Maybe he's worried about competition or something. I don't know.
Could it just be as simple as he's found something better to swap into?
Yep.
Yeah.
Could be.
Maybe.
But yes, as we know from the quality crowd, you never really sell, unless you. How many times have you been bitten by that? Selling something to buy something better.
The story changes.
Yeah. Unless you've really got a good reason, So, but he might have a really brilliant reason that I just can't see. I've read everything. There's no red flags anywhere. I can't find them. It is a slow grower. It's not going to be,
Yeah, but that doesn't really put him off.
No.
Over at our Aurus, it's not really a big deal to them.
No. So, that's the one I got for us. And hopefully, if the banking thing goes crazy, I'm hoping this might get tagged along with it a little bit and pick it up at a very reasonable multiple here. So that's what I'm hoping for. Might be wrong, but you can live in hope.
Yeah, there you have it, ladies and gentlemen. Add Henry to your Henry and Associates to your watch list. Thanks for bringing that, Tim, this week, and we will see you next time.